Good day, fellow investors. This might be blasphemy, but I don't think Berkshire is such a great buy nor a hold at the moment. Perhaps a hold. Let's discuss. The latest earnings, valuation, 2 reasons not to buy. Buffett isn't buying. Buffett leaving is also a topic. If we look at the latest earnings, all well with Berkshire, huge pile of cash. He just increased a little bit the cash, but that's under 3 months. So these are the cash flows, 340 billion plus some other extras. So 340, 344 billion. If we look at earnings, so over the first 6 months, you have this accounting shenanigan, investment gains and losses, that is just 71 million. Therefore, we can just look at the net earnings and they are clearly representative of what Berkshire is and what Berkshire does, around 17 billion. 17 billion for the first 6 months, 17 billion for the next 6 months, and that's 34 billion of value creation from Berkshire. If we go to our comparative intrinsic value table, and if I look at Berkshire, I have put net income even a little bit higher as there are some hidden earnings, hidden benefits with Berkshire, no dividends. And then we can play with the growth rate here, 6% per year for the next decade, no recessions, no shocks in my estimations. A terminal multiple, historical average for Berkshire is 15 on the 2033 earnings for 2034. That means that the market capitalization of Berkshire is expected to be 1 trillion in 2034. Therefore, for a discount rate or expected return of 10%, the intrinsic value is 390 billion. Higher rate, of course, immediately you have a much higher intrinsic value, but also I have increased the terminal multiple. Bad case scenario, let's say a downturn, a recession or something, Berkshire goes 70% down from where it is now. Of course, you can download this comparative table on my free investment course in the link in the description below. So if I compare my 300 billion with the market cap of 1 trillion, it's really a bad situation from an intrinsic value perspective. Of course, 1 trillion, 40 billion value creation, that's 4%. Let's assume Berkshire grows alongside the economy at 3%. That is a 7% return. But keep in mind also these 4% are reinvested for growth. Then you can discuss the cash, 300 billion, so you might want to deduct that. But keep in mind that is also now leading to 14 billion in interest payments from the 3.54% treasury yield, 3 months yield. So if you deduct that, then you also have to deduct 14 billion. That's how you can play around that valuation. However, 40 billion on 1 trillion, that's 4%, perhaps 5-6% with the growth. Keep in mind there might be recessions, there might be this, there might be that, and therefore Berkshire is an okay long-term, always will be, always is an okay long-term wealth compounding machine. If you buy Berkshire now and you leave it there for the next 30-40 years, I'm very sure that it will do very good. Much better than 98% of other things. However, Warren Buffett is saying something with this. This is his cash pile. Therefore, he is saying, look guys, there is nothing to buy. This is extremely expensive. The markets, I'm not buying anything. And then you do as you please. Further, Berkshire Hathaway did buybacks because Warren Buffett thought that it was worth to buy Berkshire Hathaway for an 8% to 10% return on investment, which is his promise to investors made through all these conference calls. And he stopped doing buybacks recently, just a little bit here. But look at this. He was doing buybacks here when the price was half of what is now, 40% of what it is now. Here he isn't doing buyback. So I cannot tell you, okay, it is a great buy. When it comes to Buffett leaving, I don't think it's an issue. The issue with Berkshire is, of course, its size, because 340 billion of cash, that's not something you can deploy like this. So Buffett, no Buffett, Ajit Jain is there, Greg Abel, they will just keep on doing what Berkshire is, just keeping the cash, not spending, not doing crazy things, not doing Wall Street things, not chasing anything. So I think Berkshire will be okay because it's simply in its DNA. However, the size is the issue that will again limit long-term returns there. Tomorrow I'll update my quadrant, so watch that video on better stocks to buy. Also check my research platform, subscribe, and I'll see you in the next video.